All right, thank you all for tuning in to WGHC 98.3 FM, your voice of music, your station. My name is Jeff Badu, and I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises LLC, which is a multinational conglomerate in the finance industry. What we do is we provide a suite of financial services, including tax preparation, tax planning, credit repair, financial consulting, and services of that nature. So today we'll be talking about essentially how do you build wealth through life insurance. It's something that some of us may not know, some of us may have forgotten, or some of us just may not be used to the strategy overall. So today I'm here to cover basically how to build wealth through that vehicle known as life insurance, and essentially just give you guys some tips, some tricks, just some of the things that you may not know, sharing some of the secrets. And we will tie it back to COVID-19 just to emphasize on the importance of having life insurance during this time, because we all may know it is very, very important to have it, especially during a time like this where you might be putting your family at risk, where tomorrow's not promised. I mean, there's so many things going on right now. But before we do that, as usual, let's kick it off with the market report. This report is as of May 29th, 2020, so last Friday. And by the way, we will be wrapping up at 7:45 today because I have another training to go to. And there's a lot of activity going on in the city of Chicago right now with all the riots and all the crazy stuff. But with the stock market closed last Monday in observance of Memorial Day, Tuesday's trading led to solid returns for each of the benchmark indexes. The S&P 500 climbed past the 3,000 mark for the first time since March, only to trickle down or only to trickle below the 2019. Only to trickle below by the end of the day. The small caps of the Russell 2000 led the indexes after closing 2.77%, followed by the Dow 2.17%, the Global Dow 1.96%, and the Nasdaq 0.17%. Stocks soared for most of the day, only to be tempered later on Tuesday after a report arose that President Trump was considering imposing sanctions on Chinese officials. I mean, as if that was a surprise. A war between the U.S. and China has pretty much been ongoing for quite some time now. The Dow closed up over 2% on Wednesday to reach 25,000 for the first time since early March. The S&P 500 gained nearly 1.5%, pushing past 3,000 for the first time since March 5th. The Nasdaq was held back by some large tech stocks, yet still managed to close up by over 0.75%. The small caps of the Russell 2000 surged ahead by more than 3% by the close of trading last Wednesday. The possibility of cash incentives to get people back to work was another sign that the economy is slowly beginning to rally. Globally, the stocks STOXX Europe 600 index rose 0.2%. On the heels of the European Union's or EU's proposal of an $825 billion recovery fund to help offset the economic ravages caused by the pandemic. So, of course, for those that may not know, we're still in the global pandemic right now known as COVID-19, which is devastating the economy. It's devastating people's health, and it's devastating a lot of things. And you couple that with a rally or a riot that's going on, that's cause for some disaster right there. But overall, fears that President Trump would take action against China sent markets reeling at the end of the day last Thursday. And ultimately, stocks fell for the first time in 4 days as each of the stock benchmark indexes closed the day in the red. only the global Dow posted a modest gain. Reopening economies provided optimism for foreign investors, pushing European stocks higher. Crude oil prices continued to climb, gaining nearly 2.0% on the day. Investor optimism remains driven by the prospects of an economic recovery. Stock surged ahead last Friday. All right, so last Friday we had a nice uptick in the stock market. For the week, despite President Trump's condemnation of China for its handling of the pandemic and its increasing attempt to exert control in Hong Kong, although he did not suggest the imposition of further economic sanctions. For the week, each of the benchmark indexes essentially posted solid gains, led by the global Dow, pushed ahead by growing economic hopefulness in both Europe and Asia. The Dow gained nearly 4%, followed by the S&P 500, the small caps of the Russell 2000, and the tech stocks of the NASDAQ. So NASDAQ is mainly composed of technology stocks. Year to date, the NASDAQ is close to 6% ahead. So the NASDAQ is actually up this year, by the way. So it is not doing bad at all so far this year. It's actually up 6%, meaning technology is where you have to be, right? Technology is what can survive in the pandemic. Technology is what can survive during a riot, looting, all of that. You can't really steal technology, right? Even during a time like this. I mean, you can, but you can't. Ahead of its 2020 starting point, while the S&P 500 is quickly closing the gap. Price of crude oil went up $33.33 per barrel to $35.34 per barrel. Price of COMEX gold went up $17.34 per ounce to $17.45.80 per ounce. So far this year, the Dow Jones is down 11.06%. The NASDAQ is up 5.76%. The S&P 500 is down 5.77%. The Russell 2000 is down 16.45%. The global Dow is down 15.42%. The federal funds target rate is at a measly 0%. And the 10-year treasuries is at a mere 0.64%. A few things to look ahead this week. Key economic data out this week focuses on the employment numbers for May. So the employment numbers for May is coming out this week. April saw 20.5 million jobs lost and an unemployment rate that soared to 14.7%. That's very scary, by the way. 14.7% unemployment rate and 20.5 million people lost their jobs just in the month of April. That's pretty scary. Now, all of that to say that we must still live life, right? We must still be able to protect ourselves. We must still be able to do things that are truly right for us, first and foremost, and then for our families. And one way to do that, especially in a time like this where tomorrow's not promised, you have thousands of police officers outside right now, literally outside the door or outside the window as I speak to you. And you have a pandemic, COVID-19, right? I mean, there's so much risk out there right now for being outside that it is insane. For the amount of people that are outside right now, like literally right now as we speak, the amount of police officers, the fact that the COVID-19 has not gone away, it is still in the air, and people are still exposing themselves to this virus. Today really brought me to the point where I needed to talk deeply about life insurance, to really, really keep it real. Now, it is meant to protect your life and to cover your loved ones when it's all said and done, but you can also build wealth, right? You can actually build wealth through life insurance, something that a lot of us don't do. A lot of Americans, majority of Americans, don't have life insurance, nor do they even know that they can actually invest through life insurance. Some are safe investments, some are more risky investments, but ultimately, every single person that's listening on this segment right now needs life insurance. We all have to have it. It doesn't matter if we have kids, if we have extremely important to have it because we want to build a legacy. We want to leave something behind. And it doesn't have to be for kids, remember. It can be for family members. It can be your parents. It can be a charity that you care about, your church. It can be something, because when you die, you don't take the money to the grave with you. The money has to be left somewhere. And believe it or not, people like Prince, celebrities like Prince, Aretha Franklin, and even Pablo Picasso, one of the greatest artists of all time, if not the greatest, died without a will and yet alone a trust. They left the world with nothing to show for it. People were suing them for millions and millions and millions of dollars because they could not properly protect their assets. They did not have an estate plan in place. They didn't even have something as simple as a will in place. So we all need life insurance. Everybody that's listening right now needs life insurance. And that's even for the kids. When the kids are young, the moment they come out the womb, 14 days old, you need to get them a life insurance policy, preferably one that can actually build them some wealth over time, long-term sustainable wealth, right? The reason why is because we're all going to die at some point. And remember, I just said that tomorrow's not promised. With all of that's going on in the world today, tomorrow's truly not promised. We don't know what's about to happen. We don't know if the sky is about to fall tomorrow. Right? So that's why we need to make sure that we are properly protecting ourselves and we are protecting our families as well. Now, life insurance can protect your family in the event of death. That's what a lot of us know today, that life insurance can only protect you when you die, or that the money doesn't kick in until you die. And that's a complete myth. It is complete myth. You can actually reap the benefits of life insurance while you're alive. It is one of the ways that the rich or the wealthy build wealth, right? Some of these people that you see that are celebrities, or some of these people that you see out there that are wealthy today, some of them actually had a head start. They got that life insurance policy from their grandma or their mother or their father, and it got them good. It got them started really good. It has some cash in the bank that they can work with, start a business, go to college, all of that. So today I'm here to break down some of the important things you need to consider when it comes to life insurance. If you don't have a notepad, you're making a big mistake right now. Anytime I present, anytime that I'm talking, anytime that anybody's talking, it's very, very important to take notes, especially on a topic that's so important, that's so critical, that a lot of us don't even know about it today. In my personal opinion, it is extremely selfish to not have life insurance. And the reason why is life insurance can be very, very cheap. It can cost you as little as $1 a day, $20 a month. That's very, very cost effective. Anybody can afford $20 a month right now. If you're listening right now, your phone bill is probably more than $20 a month. It is sad to see that some people protect their cars and don't even have protection over their own lives. Meaning that they have car insurance, but they don't have any life insurance. Now think about that for a second. Let that sink in for a second. Where are your priorities truly if you're willing to protect your car before you protect yourself? The problem with society is we've become way too materialistic, and that sometimes our priorities is not really on point. And this is one of the things that I shared in my new book, titled Infinite Expansion, How to Infinitely Expand Your Vision of Abundance. And that sometimes our priorities are simply not on point. It's not aligned. It's not where it needs to be, because ultimately, why is it that we're willing to protect our cars? We're willing to protect our homes. We're willing to protect all these things, but we seem to forget about the number one thing that we should be protecting, which is our own selves. So the least you can do in life, the very least you can do for yourself, is protect yourself. Now, before I move any further, full disclosure, if you need life insurance, or if you need help, if you need a second opinion, a financial needs analysis, we do run a company called Badu Life and Health Solutions, which is essentially a life insurance consulting company that can help you assess your needs, and get you everything you need. Of course, that's one of many companies in the Badu Enterprises. So we can help you with getting the policy that's right for you, and ultimately just making sure that you're protected. But when you don't have life insurance, you're essentially putting your family in danger, meaning that ultimately you're not really protecting your family. So when you die, and I say when because everybody will die at some point, but when you die, you have funeral costs that need to be paid. Now, if you live in a family that came from poverty, or if you live in a family that did not come from money, then you know that putting the funeral costs on the family is a huge burden, especially if you want people to truly celebrate your life, which is what I believe a funeral should be for. It should be for the celebration of a life, just like a birth or a baby shower is a celebration of a birth, right? Same thing here. A funeral should be the celebration of somebody's death. If you truly want somebody to celebrate your death as opposed to mourn, and I mean, honestly, I feel like the reason why most people mourn over the death is because of the financial burden that it comes with. I guarantee you, if you were leaving $1 million, $2 million, $10 million to people, not to say that your death won't leave them sad, but I guarantee you, if you died knowing that, right? If you died and they knew that, then I guarantee you the mood of that room would change a little bit. Not completely. People would still be sad for your death. But I guarantee you that stress or that sadness will ease down a little bit, knowing that you had something to show for it and that your funeral is actually going to be covered by your life insurance policy or anything else that you left to this world. We simply have to have it. You might be hearing in the background, there's helicopters flying everywhere. You got the national, you got the feds that are pretty much outside. You got a lot of police officers. I mean, there's so much that's happening right now in the world right now. And me personally, God forbid, if I left this planet today, I would be proud to say that I left my family with something. That I left my family with wealth that I can transfer to them, and they can continuously build the legacy from there. So for me, I don't live with regrets. I don't live knowing that I would have this huge burden on my family once it's all said and done. And to me, that is a fulfilling life. Because funeral costs can be very expensive. Very, very expensive. If you have to bury somebody, you know that a funeral cost would be very expensive. I just had a family member who died recently. We spent $20,000 just to cover his funeral. $20,000. And that's not including his probate costs, right? His court costs that he has to go through a process called probate, where they give all your assets to the state, and then the state determines who gets what. If you don't have a will, then basically it's up in the air. If you do have a will, then the state will read the will and basically determine who gets the assets. If you have a trust, there is no probate, and everything passes according to the trust documents. This is what cost Prince millions of dollars just to get through, and he had nothing to show for it, unfortunately, because people were filing child support, filing all types of claims, against him. But life insurance is an agreement between you, the insured, the person who's being insured, and an insurer, such as an insurance company. You get to choose your beneficiaries, so there's no stipulation that somebody gets to choose for you. It can help replace the loss of income that would occur in the event of death. This is what I mean when I say you might be selfish if you don't have life insurance, especially if you have kids and loved ones that you care about, because the life insurance policy, the death benefit, can actually replace your income so that your beneficiaries or the people that relied on you while you were alive can still maintain, sustain. I guarantee you a lot of these problems that you see in society today, they tie back in some way, shape, or form to the economics. Right? And that the dad did not leave the son anything. So now the son has to be out on the street selling drugs, doing all types of stuff, because he has nothing else that he can do to sustain for his own family. Let's say that child didn't learn things about, or it didn't learn father principles, now that son has his own son, and guess what? That son, your son needs to care for that child. So it's all a multi-generational effect. It's all a trickle-down effect. And that when we can truly build wealth, one of the ways to build wealth is that life insurance policy. This can be very powerful, especially for communities of minorities. It is very, very important that we get some of these things. Now, with life insurance, you can also be used to pay any debts that you leave behind, such as mortgages, car loans, credit card debts. When you leave the world, you don't leave your debts, by the way. Meaning that the debts are still on this planet. So, student loans. The moment you leave this planet, somebody has to pay your student loans. So, for you to leave this planet without having life insurance, I think is extremely selfish, because now who's going to pay those loans? Remember, you have to put down 2 names of references in case you couldn't pay your loans. Well, guess who they come after now if you can't pay your student loans? Those 2 people. So this is what I mean regarding the selfish aspect, in that not only the funeral costs, but also the fact that you leave behind debts and you leave behind income that's not replaced. That, to me, is a selfish mentality. That's why I say everybody that's tuning in right now should have life insurance, even if it's basic coverage, even if it's funeral-only coverage with a little bit just to cover at least maybe a few months of income, just to give people some time to figure things out. The nice thing with life insurance is that the proceeds that are given to the beneficiaries are tax-free, meaning that when the death benefit goes to the beneficiaries, they'll go to the beneficiaries tax-free. Now, if you have a certain amount, over $10 million, then it might be there might be an estate tax that applies at the estate level. The estate itself has to pay it, not the beneficiaries themselves. And you can truly create wealth for your beneficiaries. Truly create wealth. Some well-known billionaires, not all. As a matter of fact, most billionaires got there through self-made. Right? They're self-made billionaires, self-made millionaires. But some of these people inherited something from their family. As you might hear the Walmart story with Sam Walton passing down his wealth to his family. And now the Walton family is one of the wealthiest families in the world today, because they're passing down the wealth from generation to generation. So why can't you do the same? Do you need to be called Sam Walton to build wealth or pass down wealth from generation to generation? Absolutely not. You too can start a business. You too can get a life insurance policy. You too can get a retirement account that can be passed down from generation to generation. So I want you to ask yourself the question: when you die, what do you want to be known for? Do you want to be known as a burden, or do you want to be known as a hero or the savior for your family that built long-term sustainable wealth that was passed down from generation to generation? And for those that are scared that their kids might do something stupid with the money, well, you can put it in a trust, where the trust determines basically how to go about using the money. So we do need to really, really consider our families and our loved ones when it comes to this topic. It's very important. So remember, when you die, what do you want to be known for? If you leave nothing behind, you'll be known for nothing. You leave nothing, or worse, a debt, you'll be known for nothing, or even a burden. Your legacy will virtually disappear, and people will forget your death in a month. They'll forget that you were even living on this planet. Versus somebody who is building long-term sustainable wealth for their family, you're going to be remembered forever. Michael Jackson, I applaud him tremendously. His family is truly wealthy because he did the right thing. He had the policies going. He had a will. He had a trust. He wasn't like Prince, who did not have a will, did not have a trust. And Michael Jackson's estate is making millions and millions and millions of dollars as we speak right now, even though he's dead. Right? Every time you click on his YouTube, every time you listen to Thriller, which I believe is the #1 song that's played on YouTube right now, you're making Michael Jackson money through royalties, through YouTube ads. Right? Every time you go out and play Thriller, a lot of people listen to that song Thriller. You're making him money. Right? He's probably made $5,000 in the past 5 seconds that we just spoke. That, to me, is what you call wealth. wealth that can just be built on its own and is sustainable and is long term. It never disappears. It just keeps building and building and building from generation to generation. That, to me, is what's called wealth. And even in the Bible, that's what's defined as true wealth. True wealth is not having a job. Okay, it's good to have a job, but wealth is not within the job itself. Wealth is if you take that salary you earn and go out and invest in a life insurance policy, invest in a business. That, to me, is true wealth. Life insurance needs depend on whether you're married, the size of your family, the nature of your financial obligations, your career stage, and your goals. Life insurance needs typically increase as you get older. Right? So as you get older, as you attain more in life, your life insurance needs tend to increase. You should always continuously reevaluate your coverage over time. My advice, at least once a year, reevaluate your policy and see how it goes. And for those that didn't catch it, full disclosure, I am a licensed. I'm licensed in life insurance, right? So I know the ins and outs when it comes to insurance. We own a life insurance agency called Badu Life and Health Solutions, LLC, which is owned by myself and my beautiful fiance, Yvonne. And we can both help you when it comes to this. It's very important. Don't let COVID-19 distract you from your vision or your goals of building wealth. Don't let this thing distract you. Don't let people looting out on the street or don't let people rioting deter you from building wealth. You still need to build the wealth at the end of the day. Whether the rioting goes on or not, whether COVID-19 goes on or not, your legacy is still at stake. So we can't forget about that. And we got about 10 more minutes to go. So I'll speed it up a bit. We might have a part 2 of this, but this is a very critical topic. So excuse me if I sound like I'm going too fast in these next 10 minutes. The type of policy you choose and the amount of your coverage, the type of policy that you choose, the amount of your coverage, your age, and your health all play a part in the cost of the coverage. There are 2 major types of life insurance policies. This is very important to note. There's term life, which all of us know. You die, it kicks in. And then there's permanent cash value life, where basically, whether or not you die, you can still build wealth through the policy. Term policies provide life insurance protection for a specified period of time. So if you die within the coverage period, let's say 30 years, then beneficiaries receive the death benefit. No questions asked, typically. And make sure you get an attorney that reads over these documents too, by the way. If you live until the end of the term, then the policy terminates, or you can renew it and it will cost you more. So me personally, I'm not a fan of term life insurance. It does make sense in certain scenarios, maybe somebody who's older. But when you're young, I don't think a term might be the best solution for you, unless it's at work and it's very, very low cost, right? Very, very cheap, $50 a year. I mean, you can definitely afford that. For example, me personally, I have a life insurance policy through the AICPA, American Institute of Certified Public Accountants. It's a group plan. It's my only term policy. And the reason why I got it was because the cost was very, very justified. Very, very justified. Very cheap for what you're getting. Term is typically available 1 to 30 years in most cases. Can be renewed until the age of 95 in some cases. Premium payments typically increase as you get older. So the older you get, the riskier you become, the unhealthier you become. So basically your premiums tend to go a little higher. There's no ownership in a term policy. It's basically like you're renting the policy. And with the permanent insurance policies, so that's the first one is term. That's what we all know. That's what some of us were taught in school. You get a policy, you pay monthly, and then you have a death benefit. It's sort of like car insurance pretty much. But now let me introduce you to one that you might have not heard of or not know the power of. Right? Permanent insurance policies provide protection for your entire life. So your whole life, your entire life, as long as you pay your premiums. Meaning the insurance company cannot cancel you. Only you can cancel the policy. It's not like term where there's a period of time where you have the policy. This is a permanent policy. Hence the word permanent. And then ultimately, you get to own the policy. It's like buying a house, basically. So you get to own the policy. The premiums are higher than term policies typically because there's a little bit more cost, but don't let that deter you. Right? Think about how much you can earn and grow over time. You can accumulate and withdraw money tax-free. My two favorite words in life, tax-free. The account builds what's known as cash value, so that's like an investment account over time, and the cash value can be withdrawn with or without penalty at any time. You can borrow against the policy, so when some people tell you you can pull out money from a life insurance policy tax-free, it basically means you've created your own bank, right? So it has John Doe as the bank, and basically you yourself can knock on your bank's door and say, knock, knock, and your bank opens you, and you say, I need $20,000 today. What can you do for me? And you yourself, as the bank, say, oh, yeah, I'll give you $20,000 at a 5% interest rate that you're paying me, you're paying yourself. And basically, this is how you take out money from a life insurance policy tax-free, is you are your bank, right? This is something we should be teaching our kids. It's a principle. Money is just a circulating tool. It's just something that, money is just a thing, something that just circulates over time. So it should not be something that we just hoard in our houses or anything like that. It's something that circulates. Money is a circulation tool. So when you can create your own bank that you can have in a safe place, and you can knock and open the door at any time you want, pull out money from yourself at any time you want, that's very powerful. And that's what's called the cash value that you can pull from at any time. So you're paying yourself back as you're borrowing the money, and you don't pay any taxes on it. Premium payments may stop at a certain age. There are various forms of permanent policies. Won't get too deep into the weeds, but if you ever hear that there's whole life and term life, that's a myth. There's permanent life, and then there's term life. Whole life is one of the permanent life insurance policies that's out there. So with whole life, which is one of the 4 permanent life insurance policies out there, there's level or equal premium payments for life. So there are a lot of guarantees with whole life. The death benefit and the minimum cash value are predetermined and guaranteed. Any guarantees associated with payment of death benefits, income options, and rates of return are solely based on the claims paying ability and financial strength of the insurer. In other words, make sure you get a life insurance company that's reputable, that can actually pay the death benefit when it's all said and done. It's pretty safe, I would say. It's very, very safe to own a whole life insurance policy. Full disclosure, I have one of these policies myself. Now, unfortunately, that was the only type of permanent policy that I was told at the time that I got it. I never knew about these other ones that I'm about to tell you right now. Remember, this is a show where we raise awareness and we bring you information that you may not get in other places. Policy typically pays dividends, so that's a huge plus. So you get dividends, every periodically. So that's a return on your investment. It typically does grow slower at some of these other permanent policies. Now, here are 3 other permanent policies that you may have never heard of before. Powerful, very powerful. And it can get even deeper than this. But I'm just giving you the basics today. Universal life. So that's one of the permanent policies. You may pay premiums at any time, so very flexible, in any amount as long as the policy expenses and the cost of insurance coverage are met. The amount of insurance coverage can be changed, so it's very, very flexible. This gives you that flexible option. I love flexibility. And the cash value will grow at a declared interest rate, which may vary over time. You can also get into an index fund where basically there's a minimum guaranteed, and then there's also a cap. So you can't lose money, and then basically you can earn a decent amount compared to the market, such as the S&P 500 index fund. It's more flexible and typically grows at a faster rate than whole life. It's basically a combination of term and whole life, so I'm a huge proponent when it comes to universal life. I love universal life personally, especially one that's indexed to the market, aka an index universal life. Next, you have a variable life. Variable life is similar to whole life, where it has level premium payments for life. The death benefit and cash value fluctuate. This is a big difference. Depending on the performance of the investments, what are known as sub-accounts. So basically, you get to choose your own investments in a variable policy. A sub-account is a pool of investor funds professionally managed to pursue a stated investment objective, such as a mutual fund, an ETF, an exchange-traded fund. The policy owner himself, so you, get to select the sub-accounts in which the cash value should be invested. So a whole life essentially gives you, variable life gives you the flexibility to pretty much get to choose how you want your investments to go. Last but not least, and by the way, every single one that I'm naming here, I personally have one of them. But there's variable universal life, which is life insurance on steroids. Variable universal life is a combination of universal and variable life together. All right, so it's like two giants being merged together. You may pay premiums at any time, so similar to universal life, in any amount as long as the policy expenses and the cost of insurance coverage are met. So if your premiums are supposed to be $100 per month, but your cost of insurance is $25 a month, all you need to do is pay $25 a month to keep that policy active and alive. You don't have to pay the full $100, although it's recommended that you pay the $100 per month. The amount of insurance coverage can be changed, and the cash value goes up or down based on the performance of investments in the sub-accounts. So that's where the variable feature comes in. Variable means you get to pick your own investments, and the investment performance varies over time. Extremely flexible. I mean, it's life insurance on steroids. And some of these are also have a minimum, right? So some of these actually have a minimum. So you have unlimited upside, but very limited downside. Secret, that's the best investment on the planet, where you have limited downside, but unlimited upside. Meaning you cannot lose money, but you can earn an infinite amount of money. Powerful. Powerful, powerful, powerful. So where do you get life insurance? You can get life insurance through an employer, an association, a licensed life insurance agent or brokerage like my firm offers, right? Or a broker, excuse me, or directly from an insurance company, maybe your Merrill Lynch, or your Northwestern Mutual, Transamerica, whatever company you decide. Always do your research. Remember, if you need somewhere to start, just let me know. Any policy that you buy, this is very important, is only as good as the company that issues it. So always investigate the company offering you the insurance excuse me, before you buy it. So it is very, very important to make sure that you analyze the performance of the insurance company. So ultimately, what we talked about today was making sure that you get life insurance first and foremost, and you make sure that you are building long-term sustainable wealth for your family. And we have a question here. Is it like a Roth IRA? Yes, it is like a Roth IRA, but there's no limits, basically. You can put as much as you want. It's called a non-qualified retirement plan, let's call it, where you can put anything you want. So definitely appreciate you guys for tuning in to WJC 98.3 FM, your voice and music, your station. Once again, this is the show Money Talks, where all we talk is money. My name is Jeff Badu, and I look forward to continuously delivering you awesome content. If you have any questions, please let me know. Phone number is 773-679-7198. Once again, 773-679-7198. You can email me at jeffbadu@gmail.com or check out my website, jeffbadu.com. The book, Infinite Expansion, How to Infinitely Expand Your Vision of Abundance, is available on Amazon. It's only going for $4.99 right now. The ebook is out. The physical copy is coming out in a few weeks. So it's a book that can truly, truly just, tap into your mind and just make you elevate to the next level. Reading that book will tap your spirit and your mind to the next level. I guarantee you that. Feel free to share some feedback on the book. Let me know how it is. I poured my heart and soul into that book. So appreciate you guys once again. This is WJC 98.3 FM, your voice and music, your station. My name is Jeff Badu, and I look forward to continuously delivering you awesome content. Thank you.